Thank you, Lauren. So welcome everyone to today's webinar on succession planning. We're going to be exploring the strategic data-driven approaches to safeguarding client relationships and identifying potential successors. Developing a proactive and effective succession plan not only ensures strategic continuity, but also supports long-term financial viability and operational stability. As a way of introduction, as Lauren said, my name is Stacey Morrow, and I am a legal industry director at Introhive. Although that I've been at Introhive just a short time, I have worked within the legal industry and with professional services for over 15 years. Today, joined with me, I have Kevin Wheeler, who is a principal at Wheeler and Associates, Ben Hymans, who is the head of operations, platform, and analytics, global client care at CBRE, and Gary Shamis, who is the CEO of Winding River Consulting. The gentlemen today that are joined with me are a very diverse group of individuals. So I do want to give them a moment to introduce themselves and tell you a little bit more about their business and their industry. So Ben, I'm going to go ahead and start with you.
Thanks, Stacey. I'm Ben Hymans, and I work for CBRE. For those of you not aware who CBRE are, they are the world's largest commercial real estate advisory firm, working with some of the largest investors and occupiers within the commercial real estate space. I've been with CBRE for 20 years now, all within the space of client care and business development. And my role sort of has three principal components to it, all closely aligned to the subject of the webinar today. I run our client partner or key account management program. I also look after our client listening and client feedback initiative. And I'm also responsible for our client data strategy and platforms associated with that as well.
Okay, thank you very much, Ben. And Gary?
Thanks, Stacey. Gary Shamis with Winding River Consulting. And best to maybe just give you a brief background. I function in the CPA industry, United States. We do represent clients all over the world. But in the early 80s, I started my own CPA firm, and I grew it to the 37th largest firm in the United States. We had about 600 people and over $100 million in revenue. I sold it to BDO 9 years ago, and at the time, it was BDO's largest transaction in their history. Went over to BDO as a senior partner in charge of growth, and I found myself in a bad fit. They're being very bureaucratic, and I was very entrepreneurial, and it drove me crazy, and I had to leave. So I left, and still wanting to work, I launched Winding River. We're on our 8th year. And Winding River focuses on leadership development. We train managing partners of CPA firms. We've trained about 40% of the top 400 firms in the United States. And then we also do digital marketing work for CPA firms, and we have a pretty robust advisory practice. So our expertise is basically in the CPA industry on an international basis.
Okay. Thank you very much, Gary. And Kevin, we'll go ahead and conclude with you.
Yeah, thanks, Stacey. Hi, everyone. I'm Kevin Wheeler. I'm a business development consultant and coach. I work with professional services firms, helping them to grow their key clients and win new business. I've been in the sector for nearly 40 years now. It's my entire career. I started off in-house many moons ago with PwC. I was marketing director at a top 10 London law firm. And my last in-house position was as marketing director at then Europe's largest private equity firm. I've been running my own consultancy, Wheeler Associates, for nearly 30 years.
Okay, great. So as I said, we do have a very diverse group and background here today. But I think as we think about and looked over the participants that are joining us today, a lot of similarities and just the words and nomenclature and language that are going to be used regardless of the industry that you work in. So as we were preparing for today's discussion, we were really thinking about what does succession planning mean, and you kind of go through and you're trying to figure this out. So perhaps, Kevin, can I help you? May I ask for you to kind of set the scene and kind of guide everyone to what we're defining and really understanding what we defined as succession planning.
Yeah, sure. We're focusing today exclusively on succession planning around firms' key clients. So making sure we've got succession in place for those people that are going to lead on that key client account. We're not looking at succession planning as it relates to broader practice management, managing partners, practice area heads, office managing partners. We're not focusing on that. It's just purely on key clients, key accounts, and how we get in place the right people to lead on those accounts. And obviously, the most important person to lead on an account is the relationship partner or the lead partner, depending on which sector you're in. And then also we'll be looking at the whole pyramid of the team setup, people working below the client relationship partner, the other partners, right the way down to junior individuals on the team coming through over the years, looking to step into the shoes of those people above them. So we'll be looking at the whole gamut of succession issues right across that client team pyramid. I thought it would be useful to start by making sure that we're all on the same place, on the same page, and start with a sort of definition of what succession planning is all about. And I've defined succession as a planned process to deliver the best people into leadership roles at some point in the future. So it's looking forward, picking out the best people. We'll have an interesting discussion, I'm sure, shortly about how we define the best people. And making sure that we get them set up to take over from those who've gone before in plenty of time to make a smooth transition. And of course, making sure we've got the client on board when we put those new people in post.
Great. So I think that definitely, Kevin, you laid out some key points, and I must say that Kevin shared his definition of succession planning, and it aligns pretty well with what a quick Google search will get you. So he nailed that spot on. But as we think of
Google search, Stacey.
I know I had to get it in there, right? So as we think of succession planning, it's kind of can be scary, right? And if you think about it, a lot of firms often don't know where to start, and they move on to another topic. So Gary, I'm going to go over to you. When you think of some issues, right? Like, what are some key issues around succession planning that you can kind of that some of your clients may have encountered, or maybe even you encountered throughout obviously your career, having your own CPA firm?
So let me give you two looks here. One look, and I know we talked about being key client relationships, but I really can't avoid talking about what's happening in the accounting industry. And hopefully it's not a precursor for everybody else who's out there. But, for years and years and years in the accounting industry, for all the years I was in it, it was really kind of simple. The succession was the older partners sold to the younger partners. And it worked really well for a long time. But what's happening today in the accounting industry, as probably a lot of you know, is there's not enough accountants anymore. In the United States, the amount of people taking the CPA exam is down 50% of what it used to be. And what's happened is this lack of or this traditional succession, there's nobody to sell it to. What that's done is that's created just a tremendous amount of disruption in the accounting industry. And that's really led to this tremendous amount of consolidation that we're seeing within the industry. I guess first and foremost in the industry, the big issue is really getting enough people to make the succession work. Can a larger company do it? Can they attract the people? I mean, that's all kind of a work in process right now. But I will say, I ran an accounting firm for 27 years, and I think from my perspective, I try and do everything easy. I don't like complicated answers, and I think the easy answer is you can make a client transition an evolution rather than an event. You're going to win the war. And sometimes you can't avoid an event. Somebody walks out and leaves. They get sick, and all of a sudden you have to make this transition, and that is not ideal. But when you're in a situation where you can make this an evolving transition, you have a much, much better chance of being successful. And what we did at our firm, I mean, I had a big firm and a lot of clients, probably 10,000 clients, is we used to stratify when we had an event like that. And certainly take care of the big producers in terms of clients and be sure we're doing that right. And sometimes the smaller ones we didn't do as well, but we just didn't have the resources to do that. So, maybe a little bit different perspective in the accounting industry.
Great, thank you. And so then, like, obviously we have how you practice, like, kind of the commercial real estate practice. It is different, definitely, in the European market versus what it is in the States. So how does that transcend with, within your industry, and kind of how that, how could that be applicable to, some other, what you're seeing in other, in the legal and professional services?
I think there's a lot of similarity to what Gary talked about, where what we are seeing is a generation of people specializing very quickly as they enter commercial real estate. So in the past, you had people who were almost generalists, and then the ability to step into an account leadership or a client partnership role is much easier then when you understand the full spectrum of services, what the business does, what's going on in the industry. So your pool of people you can actually pick to be those client partners, client relationship partners, is getting smaller and smaller. So it's important when you do find those people that you train them, you cultivate them, you motivate them to do things differently. Because historically, what I've seen, what we've seen in commercial real estate, is that relationship between client and principal has been very individualistic. So it's one person cultivates a relationship, keeps the relationship. Not that they don't want to let it go, but they sort of become that single point of failure rather than single point of contact. And where the real estate industry, I think, is trying to move is more towards a corporate style relationship that you have. So it's not so reliant on one person and that one person leaves the firm and you lose all those client relationships as they go with. So speaking from my firm's perspective, we've taken a lot of inspiration from what the investment banking industry has been doing, where if you are a managing partner in an investment banking firm and you're asked to take on a client, you have a responsibility both personally and for the business to try and introduce every single part of that firm to the client. And if you don't do it, I mean, one extreme we had, it was an individual who worked at JP Morgan. It was actually a sackable offence. Now, I don't think we'll ever go to that extreme, but we're trying to find ways to motivate and encourage people to be a bit more broad around what they're doing, whether that's financially, whether that's through career progression as well. So, I mean, in summary, a lot of similarities, but some nuanced differences as well.
Yeah, I think that's very interesting. And the one thing I just wrote down that you said there was really kind of the client, the one person and a single point of failure, and having that individual contact. So Kevin, how do we, as you're working with, with your with professional services firms, how do you coach your, you kind of your partners to get away from that, this is my client versus this is the firm client? Because we often hear, you still have this kind of old school way of thinking of really the black book mentality, and it's all my. So how do you work with your, with partners on that and really changing that focus?
Well, you don't start with individual partners, you start at the top of the organization, because unless you've actually convinced the managing partner and the rest of the board, the executive committee, that actually focusing on key clients as key assets, valuable assets of the firm that have to be protected and held onto and developed, rather than let individual partners run off with them if they go to another firm. You have to get the managing partner and the senior leadership team committed to do that, and then you've got to have their backing in terms of helping them drive that forward. You won't crack it on an individual partner by individual partner basis. But it is an issue, and I'll talk about the legal sector because Ben and Gary have talked about property consultancy and the accountancy market. You do have to make sure that you are institutionalizing these clients. You don't want to have clients only reporting into one partner. You're very exposed then. There was a survey out recently, a couple of months ago, carried out by BTI, I think, in the US, where they spoke to general counsel across major organizations in the US and asked them what their biggest bugbear was with their law firms that they instruct. And one of the top 5 was being ghosted by those firms when the partner left. And usually the partner was leaving because they were retiring rather than actually moving on to another firm. And so one day they're happily instructing partner X at firm Y, and then all of a sudden partner X at firm Y retires and nothing happens. There's no contact. You know, the communication just drops off a cliff. And that's unforgivable, really. You know, we'll talk about key client management in a minute, but you know, you have really got to get to grips with how you are planning for a transition between the person who's currently responsible for a major client and somebody who's going to take over in the future.
Can I comment on that? Just kind of, I think Kevin's really on track, or let me reinforce that. And I think Ben said something similar too, is that, so I started with a nothing firm and, you know, built it to 600 people. And, you know, one of my goals along the way was to institutionalize the practice. As I was smaller, you know, it was really clear to us is that, you know, my partners in a small firm, they were the ones who had the relationship with the client, and it wasn't my firm. My firm was called SS&G. That was the name of the firm. So one of the things that was really, really important to me was to institutionalize the firm. And then, you know, with that, there's certainly process that you institutionalize. You get them introduced to other people in the organization, so they become dependent in many ways upon the organization. And then also really important is just the brand of the organization, where the brand has some kind of value and meaning, you know, outside, you know, within the 4 walls of the organization. So yeah, you know, I really like to reinforce those comments because I think they're right on point.
Fantastic. Well, we're going to move on to the next session here. So obviously we've identified. Oh, absolutely. Absolutely, Kevin.
Let's stick with issues because I've got a few on the list here, so I want to plow through. I think the other thing that I see is that where firms do actually engage in some sort of succession planning, they don't get it right because they get the wrong person. And we get somebody who's responsible for the client because they went to school with somebody at the client, you know, they're members of the same golf club or something. And you know, when you're dealing with, you know, multinational clients, sophisticated users of your firm's advisory services, those are not the basis on which you want to be selecting partners, individuals to be responsible for delivering services. And we'll come on to look at in a minute how we actually define the role for client relationship partners and how we put criteria in place for selection, because in a lot of firms, you've just got square pegs in round holes, or is it round pegs in square holes? I'm not quite sure, but you've not got the right fit, and you really do need to make sure you have to maximize the opportunity for the firm, but also to maximize the benefit for the client as well. And the other thing before we move on, I think another issue is firms just don't involve their junior staff soon enough in this whole process. So, you know, in some firms, I know it's changed over the years, but, you know, there are still a lot of firms where individuals get to partnership and they're suddenly given responsibility for clients and business development and all these sorts of things, and they've actually not been prepared in terms of given the skills. And if you are looking to put junior members in positions where they're looking to take over in, you know, 5 years' time, you really ought to support them on that journey.
Thank you, Kevin. Ben or Gary, any other issues that we obviously we covered quite a few kind of identified ones, but anything else that you may have encountered either in the commercial real estate or accounting world that might be worth sharing with the group?
I mean, I'd echo what Kevin just said there. I think also sometimes we don't ask the client who they want to manage the relationship. We, to Kevin's point, because someone's a particular big deal maker, rainmaker, we assume they're the best person to do it, but they may not be. And one of the things we try to do to sort of counteract that junior point is to build the principles of client care, account management all through the employee life cycle at CBRE. So in order to get promotion from grade X to grade Y, you need to demonstrate what you've done to contribute to the program. We might, you know, proactively recruit people that are sort of predisposed to being good relationship managers as well. But I think when you ask people to do it and it's off the side of their desk and it's not something they're motivated to do, rewarded to do, that's also typically where it does go wrong. And you're only as strong as your weakest link. All it takes for one person to drop the ball with that particular client, and they have long memories. I've been, like I said, I've been here 20 years, and there are still clients that we go back and pitch to, and they remind me of the fact that 15 years ago we did a terrible job at managing the relationship. So you can't assume that a change of the guard on the client side represents a wiping the slate clean, because that's just not the case at all.
No, great. And Gary?
I'm good. Go ahead.
You're good. You're
Yeah.
like ditto. Everything that they said, right?
Yeah. Well,
No, I think that's good. And one thing I was thinking about this, as you're saying, you're not, I guess an issue with this is like, we think about this as obviously you're working with your clients, but how should this be, obviously as you're asking your clients and getting their involvement, you have to also take into consideration that they're going to have changes as well, right? And they're not going to be there forever. You're going to see turnover. People are going to evolve. People in there again are going to retire. So I think that's a really good point about asking how we should manage, because and obviously there might be changes that you or your clients may not know about, right? And you just want to have that involvement. So as we think about kind of the key account plan, I know, Ben, you touched on it a little bit there, but can you dive into that just kind of a little bit more? Because that is really kind of an area that I think, everybody's trying to identify, and you talk about, it's a buzzword. You go to a conference and someone's like, oh yes, we have a key client program, and everybody, but let's do this. This is great. We want to do it. But nobody actually, or I would say very few firms actually have one. So really being that a part of your title, can you explain kind of what you've done and kind of some best solutions on how you might be able to deliver around and helping establish this program and getting something in place?
Yeah, I think what you find is in most firms, CBRE equally is guilty of this. It's a list on the intranet of some big brands, but when you actually dig under the skin of what are we actually doing for them that proves that they are a key client, we're not actually managing them in the way that the client would expect. So this year at CBRE, we actually took a bit of a pivot in our approach. For the first time, we've actually introduced an element of financial remuneration linked to individuals who are running those relationships. So we went to our senior leadership group, we asked them to pick a client that they would like to manage, because the feeling was if you ask someone to pick a client, there's an emotional connection there, and they're going to pick someone that they see long-term value. And then we've sort of clearly defined some KPIs as to what success looks like. And it's not just revenue growth, because I think if you pick revenue, then the behaviors are, well, I'm just going to go and chase the big deal, the big transaction, the big project. It's a blend of revenue, a blend of service line growth, and a blend of client satisfaction as well. And we've tried to support those people with really good number twos. So very rarely do any of our clients on our program have just one person who's responsible for managing the relationship, and that's at the most senior level. So we'll typically have a couple of senior partners who are responsible for managing those relationships. And then we'll back them up with a junior person in an account manager or client coordinator role, who for them, it's a fantastic opportunity to work with a senior partner on our side, and a really good opportunity to work with one of the firm's most strategic clients. So they get introduced at a very early stage in their careers to what does good look like in terms of client management as well. So I don't think we've got it perfect. We're sort of early on in that journey, but we're really excited by the enthusiasm within the business to want to do it. I think in the past it felt as though it was a bureaucratic thing, and myself, one of the team would come knocking, and it was that dread from someone in the business. Oh my God, they're going to ask me to fill in the client plan, and we've sort of moved away from that. It's much more around what is going to be of interest, what is going to be of value to the client, and how are we going to ensure that this client stays sticky with CBRE over the duration.
Okay, great. So Gary, I'm going to actually going back to one of your earlier points where you're really saying that the accounting industry has a real disruption. So obviously, Ben's going through and saying, hey, we have these layers of being able to support how do you see this kind of setting up, a key client program for accounting firms where you may not have the influx of the juniors to help support your efforts?
Yeah, that could be that could take a lot longer than an hour presentation here to go over. But I mean, I would like to kind of just talk about what I used to do at my firm, and really in two ways about key clients. So I was the managing partner. I ran the firm for 27 years. One thing we did every year is we, on a revenue basis, we looked at our 25 largest clients. And I chose it my responsibility to contact all 25 clients. So it wasn't KPI, it was just a discussion. And it would call them up, make an arrangement. I may have to fly to a different office or something to see them. And it was, hey, how are you doing? What aren't we doing right? What are you happy with? But just having that discussion. So number one, they really appreciated that one-on-one from somebody who was outside the direct service team to see how we're doing. The other thing, and I'm a big proponent on this, is that we do a lot of learning, leadership development and learning at our company. And I always ask this question when I work with CPAs, and I say, well, what's the most important thing we do? And you end up getting to the point where you realize the most important thing we do is service clients. That's the most important thing that we do. And you talk to the people working in your firm, and tell me about your education. Well, I got a master's degree, I'm a CPA, I'm et cetera, et cetera. So we talked about the most important thing you do with servicing clients. And I asked the question, how many of you have ever taken a class or a course on how to service a client? And in decades of doing this, I've never had anyone raise their hand. So what we did in our organization is we built an internal program on client service. And we talked about setting client expectation, returning phone calls timely, returning emails timely, hitting deadlines and things like that. And really all under the idea that most of our clients don't know what we do. I mean, they don't review a tax return to see if it's right, and they certainly don't review an audit. But the one thing they do know is how they're treated. So we have a huge focus in terms of that, in terms of how we potentially treat our clients. Big element to us. Just to your question before, really briefly, Stacey, I don't want to use up too much of your time, but as a precursor, there's a big shift happening in the accounting world. And the big shift is, I grew up in this world as a relationship person, and we had relationship with our clients. And the reality is there's not enough people coming along to maintain this relationship type model. It doesn't work. And if you look in the United States and you see all the firms that are in excess of $1 billion in revenues, they are much more transactional. And you're seeing this shift in this industry going from a relationship industry to transaction. The relationship is never going to die, but there's not enough people to keep it in place. But those who are going to maintain the relationship have to understand it's really valuable, and they better charge a premium for what they're doing.
Okay. And Kevin, anything to add, as far as just with some solutions there, any other solutions that you'd like to touch on that are kind of valuable? I know we've kind of dabbled in a little bit, but there's some.
Pick up on a couple of points that Gary's raised. Fortunately, in the legal sector, where I do an awful lot of work, there are still plenty of bodies around to pursue the relationship model rather than default back to the transactional model. So that's good. And I am certainly an advocate of the sort of client feedback that Gary talked about. The best and most powerful thing that most professional service firms could do in order to improve their business and improve their fortunes, generate more revenue, generate more profits, is spend more time going and getting feedback from their clients. And that should be, as Gary said, done by somebody who is independent from the relationship. If you send the client relationship partner or the lead partner along to get feedback, I don't think the client's always going to be as frank, particularly if they've got some issues. And secondly, I just don't think that's the right way to do it. It's much better to get somebody who's completely objective, or is able to be objective and is independent from the relationship, to go along and collect that sort of feedback. Obviously, the larger the firm becomes, the more difficult it is for somebody in a senior partner role to go along and take on that task, because we're talking about lots and lots of clients, lots of relationships, lots of people to be interviewed. And I think it's certainly then there's certainly an argument then to be made for sort of outsourcing that to some organization that's got the skills, the resources and the technology to make that a smooth process. But fundamentally, I think solving the succession issue when it comes to client management is all about having a really good and effective and working key account management program in place. And Stacey, you said, you know, there are a lot of firms who say they've got these programs, and many will say they have, but trust me, I speak to an awful lot of firms, and when you go in and you have a really close look at what they're doing, you know, they maybe see the world through rose-tinted spectacles sometimes, and we can always improve. And in terms of succession, I think, you know, defining and putting in place, you know, really effective client relationship partners is at the core of what you need to do. And in a lot of firms, they haven't even bottomed out what a client relationship partner should look like. And I'm going to have a blatant plug now for myself. If people want to go to my LinkedIn profile page, you'll see lots of articles on there, and there's a whole series which are about client relationship management, how you set a program up, how you choose a client relationship partner. I talked about, you know, not choosing mates that you went to school with, people you played golf with at the weekend. You know, really look at the individuals within your firm who are best positioned to lead on that particular account. Do they have the right connections with the right decision makers at the client? Are they strong relationships? You know, are they the right people with the right political skills and the right tact to manage the interface between that client and the firm? Are they experienced in handling the issues that the client's facing? And Ben made the point that increasingly we've got specialists. It doesn't matter whether they're in a property consultancy firm or a law firm. And sometimes it's difficult to find individuals who've really got a really broad understanding of what it is that the firm can deliver in terms of advisory services. But you have to work hard to develop people who do know what their colleagues do, so they can go in and they can be aware of opportunities, bring those back to their colleagues, or even buddy up with some of those colleagues when they go and talk to the client, so that they are capturing all the opportunities right across the spectrum in terms of what it is the firm can do. Experience of the client's industry is another thing. You know, if you are a relationship partner for a key account, you better know that client's industry inside out, because otherwise you are not going to come across in the most effective way when it comes to discussing the client's broader industry issues, an ability to lead and motivate the team. And then finally, you know, have you actually got the time to be the client relationship partner for that client? Because a lot of people are very, very busy, and you want to ensure that the busy partner has actually got enough time to focus on the needs of that particular client. So, you know, choosing the right client relationship partner is the most important step in terms of succession for that individual. I don't know whether any other observations people want to throw in.
I think just to tap onto that, understanding the firm, that is the biggest issue we see, where you've got some very senior individuals within our organisation that have progressed through without necessarily having the need to understand everything that the company can do. So when they are exposed to those client conversations and the subject comes up, you can sometimes almost see them cringe a little bit, or sort of get nervous around, oh, I don't feel comfortable answering that. So they sort of, again, try and steer it back into an area or part of the business that they understand really well. So some of the things we're thinking about is we need a better knowledge platform, and that's not just technology, that's educating people on what we do and the value those services bring. Because it's, you know, it's not just a client relationship partner going in, putting up a pretty slide and saying, here are 20 services that we can deliver. It's actually what is the value of those services to the client, and having the confidence to talk about it as well. So I think that, you know, that's really important. And, you know, again, I totally agree with Kevin on the sectors piece, you know, the ability to go to market as a sector and to leverage that expertise, whether you're talking to banks, life sciences, tech firms. I think a lot of companies are stacked on, you know, a gold dust worth of data, best practices that they just don't know how to leverage in a structured way.
Hey, when I built my firm, we were a heavy vertical industry player. In 1999, we made a decision we were going to go from a generalist, and we focused on 6 verticals. And between 1999 and 2014, we grew to $100 million. And there is no more perceived value than having that industry value going in. And you know, you think about a succession, you better take that into account, because you may have somebody who really knows the industry, and if you're going to succeed that with somebody else, they better know that industry pretty well too, or if not, they're going to lose that client.
Yep. Very, very good point there, Gary. And a very good segue into kind of really understanding. And Ben, you touched on it a little bit, but just the, you know, utilization of technology. So, you know, we've identified these things, but like, how do you leverage and kind of really what is the role of data and technology in helping firms and organizations prepare for this, right? I mean, yes, we're talking about relationships, and Kevin, you said don't. I'm gonna steal your word. Don't just assign the relationship because it's your mate. I'm gonna, you know, use the your word there. So how do you know what do you do, right? How can we, you know, how can we use data and tech to help drive some of these decisions?
This is where
So,
Kevin would put it. You'd want your shameless Introhive plug. I'm guessing it.
you know, I didn't say it wasn't me. It wasn't me. You said it, Ben. So we're good.
So I think data has a big part to play, clearly, in identifying maybe the broader team of people that could and should be involved. So whether that's identifying super connectors within the business that are able to bring different parts of your organization together, whether that's understanding who has good relationships with the right types of people and the quality of those relationships. So I would say we use data a lot to help the client partners bring in a virtual team or a broader team. But I wouldn't say it's the be all and end all when it comes to saying that person should be leading the relationship. There's some nuanced things that need to be considered that Kevin and Gary have talked about around the right fit, the industry expertise, the ability to do it, the time to do it. So I think at that most senior level, in terms of marrying up your, you know, your person at the top of the tree on your end to the clients, data plays a slightly lesser role. But building a team or identifying individuals to work with them, I think data has a big role to play. And obviously systems and technologies like Introhive and other CRMs sort of are critical in identifying those people that should be part of that team.
Can I just take that a little bit broader? I own a conference called Winning Ways. And it's in Chicago in November. I used to have a conference for 20 years before that called Winning is Everything. It was probably the largest practice management accounting conference in the world. I owned it with a couple of buddies, and we sunsetted at the pandemic, and then we started this Winning Ways. And what Winning Ways does is that it does a deep dive on the biggest issues in the industry. And the very first year we did it, which was, this will be our 3rd year. So 2 years ago, we did our first one. We did it, we called it Capacity Without People. And this gets back to this whole issue that we're facing in the accounting world. There's not enough accountants coming into it. So everybody wants to grow because you want to attract talent. Why do you want to grow when you can't get enough people? That's a whole other story. But we talked about capacity without people. How do you make this work? And we ended up talking about really 4 levers. And the first lever is hiring and retention. You just got to do as good as you possibly can. And there's going to be a lot of competition, but it's still going to be your major driver right now. The second element is outsourcing. It is just so big in the accounting industry right now and continues to grow. And, you know, we could talk about that for a long time. Third area is practice management, which is kind of simple. Stop working on clients that aren't a fit anymore. You know, create capacity by exiting clients that don't fit what you're doing anymore. And that could be a whole discussion. But the last element is process. And in process, what you're talking about is you're talking about process itself and how you do things. And have you reviewed your process and are you wasting time? But the big really element in process is technology. And using technologies like HubSpot and Introhive and specific industry technologies to be able to do more, okay, with less people going forward. It's a really, really big element going forward in terms of how firms are able to do everything going forward in terms of technology being a big component of that. So I think on a broader basis, it has, in the accounting world, has a tremendous amount of need and needs to be considered by all firms, in addition to just how it can help in terms of key client succession.
From my point of view, I'd say there were two main areas that I see technology being a benefit around the whole sort of topic of key account management and related to that succession. The first one is mapping relationships. So if you really want to put a solid, robust client service plan in place, you need to identify who all the key decision makers are at the client organization. And if that's a major multinational with people all over the globe, that's probably going to be quite a lot of people. And then understand what relationships they have with various people at the firm and how strong those relationships are. And that then provides the basis for understanding which existing relationships you can exploit and which ones you need to strengthen and build in order to exploit in the future. And bingo, that gets you to Introhive. Thank you.
Thanks for the plug. Thanks for the plug. I appreciate it.
The other area, it relates to something we do, which is to try and measure the client satisfaction with the services and the individuals who are delivering those services. And Gary's already talked about the importance of going out and getting feedback, and that's absolutely right. But we deliver a product called Debrief, which we use with our clients to measure the client satisfaction with the firm's services at the end of every significant piece of work that's carried out. And as part of that exercise, we get the client to rate their satisfaction with the performance of individual members on the service team. And we get them to assess an individual's technical competence, their project management skills, and then just basically the ease of working. Are they nice people to work with? Do we enjoy working with these individuals? And that becomes a very powerful weapon for identifying individuals who are overperforming and individuals who are underperforming. And it can throw up some quite interesting pieces of information. We were doing something recently where the client was enthusing about, they were instructing a law firm. They weren't enthusing about the 2 or 3 partners that were involved on the account, who they rarely saw, but they were enthusing about a senior associate who basically had kept the whole transaction together. And they were heaping praise on this individual. And that sort of praise from the client gives you a pretty good steer as to which people you should be promoting and moving up within the team to become future leaders and future client relationship partners. So I think keeping an eye on what clients think right across the piece in relation to the firm's performance, but specifically the performance of individual team members is quite a powerful tool to use in the whole sort of client relationship management piece. The other thing I was going to say was, you got to remember that succession's a two-way street. So you've got to have your eye on the client and what's happening there as well, because, you know, today's client could be tomorrow's retiree or moved off somewhere else. If they moved off somewhere else, that's great. That's a bit of an opportunity you can perhaps capture. But if somebody jumps into the shoes of the client and the relationship's non-existent, or you've not had a good relationship, then you might be on a sticky wicket then in terms of keeping that client. So always keep an eye on what's going on at the client organization, to be aware of what succession issues and plans they've got, because you need to respond to those, and always ensure that you're marrying up the people on your side with the people that they're on their side, so that you've got the best fit.
Okay, great. Well, I know we're getting towards the end of the hour here, so I do have we do just have one question. So obviously, we've talked about a lot of the things that you've done with the firms and kind of experience and firms that you've been working with. But as we really look at kind of just overall organizational changes with boomers, kind of they're gonna be falling out of the workforce, and you have Gen Z coming in. How are you, where do you guys see succession planning go within the next 5 to 10 years, as we really see some monstrous organizational shifts within the workforce?
There's a woman named Rebecca Ryan who has a company in Madison, Wisconsin called Next Generation Consulting. And she worked with large corporations and municipalities on being the municipality or the company of choice for people in the next generation. And she wrote a book about millennials, and it's a really good book. My kids are both millennials, so I was able to learn a lot about my kids. It was very instructive. The name of the book is Live First, Work Second. I take that book, I show it to my audience of baby boomers who own accounting firms, and I said, if you wrote that book, what would the title be? And everybody starts laughing and snickering, and of course it would be Work First, Live Second. So there we have an issue. And that is a significant issue going forward in terms of what millennials want. And you know, again, going back to what I know as the accounting industry, you know, not only aren't there enough of them, but those that there are there, some of them don't want that responsibility, and they'd rather be a vice president of a bank than own a firm and have that responsibility. So in a lot of ways, what I'm seeing in the accounting industry is that whole divide you're talking about is really driving this transactional type of service rather than a relationship or service. It's really big. You know, I tell my clients, you know, if you're not building, you know, 61 or 62% of the workforce is millennials today. If you're not building an environment for millennials, you're missing the boat. They're not going to want to work for you. You know, and I talk about, you know, what a millennial workplace looks like. And, you know, at one point in time when it was really easy, it was just about, you know, what a dress code at work. You know, those were the good old days. Okay. You know, we've gone way beyond that in terms of, you know, what's a millennial workplace right now. But I'm not sure I have an answer, but I just have to say that firms need to pay close attention to that, because that is an absolute driver in how you run your organization going forward.
Okay. Ben, are you seeing similar kind of?
Yeah, I think that the competition for talent is fierce, and what you're seeing in real estate is a lot of the repetitive processes are getting outsourced, and the type of people that you're looking to bring into the firm is quite different. So it's not necessarily people from traditional surveying backgrounds, it's people from, you know, non-cog or people who haven't come with a real estate degree, and their expectations are quite different. You know, they're walking in day one and expecting to be out speaking to clients, whereas you go back a few years and you've got to earn your graft, you've got to do the hard yards before you were sort of left exposed and allowed to go out and talk to clients. So that is definitely quite different. And the competition as well is that the mid-cap firms are getting swallowed up by the big firms. So you're either working for a CBRE, a JLL, a Savills, or you're going to a niche smaller firm who's sort of promoting that special touch, that exclusivity that they have, that you're, you know, one of small group of clients versus one of 1,000 clients working for CBRE. So you need to find a way to get these people in, and when they do join the business, that you ingrain into them the values of client centricity, of business development, because if you don't get them early doors, those bad behaviors sort of follow them through all the way through. But I would say there's a lot of similarities in real estate to accounting from what I'm seeing.
Okay. Great. And Kevin, we actually do have a question that came from one of the points that you discussed. So someone had asked, other than surveys, what methods of measuring client loyalty do you recommend?
Well, the obvious one is, are you keeping them as a client? Are they giving you all the work that you would expect them to be giving to you? So you can obviously pick this sort of stuff up through surveys, but you can also pick up this sort of information if you do annual, every 18 months, every 2 years, in-depth client relationship reviews, where you go along and have a conversation with a senior decision maker on the client side and talk to them about the relationship, the health of the relationship. And they're pretty open. I find they'll tell you what their overall spend is for advisors in a particular area. They'll tell you how much your firm is getting. Yeah, well, they're getting 20% of our legal spend at the moment. They'll openly tell you who the other 80% is going to, because they want a competitive playing field out there. It's in their interest to have their firms keen and hungry for work. So, and they'll also tell you whether that work is dropping off, whether you're increasing your share, whether your share's falling, and why. So, you know, it's not a survey, but going out and having a conversation with a client through somebody who is genuinely independent and objective will get you a lot of the answers. And at the end of the day, you know, loyalty is only measured in one way, and that's whether you keep them as a client and continue to get your existing share or a growing share. So I'm not sure whether I can highlight anything beyond that, to be honest. But
no, yeah,
Hey,
great.
As a little sidebar, we in the accounting industry are really lucky because the two things people never want to change in life is their dentist or their accountant, and they just don't want to change. So we have the fortunate of maybe we don't do as good a job. Who wants to change? It's too much work to change because we do work for them on an annuity type basis. But I think it'd be very helpful if you had an idea how well you were doing. So.
Right. And I think that's Kevin, a great point. I actually went to a conference last year and heard the general counsel of DHL was speaking to us, and he went in and said, they were bidding out some work, and a firm that they didn't think would win when they did minimal work came in and they said, this is what you need. They were telling the client what they needed. They understood their business. They understood their industry. They won that work, and then their spend with them increased exponentially because they were working for the client, right? It wasn't assumed someone else was going to get it. So I think that's a really good point. We do have another question, and we'll look to conclude after this. So are there any quick tips for mentoring that you would recommend for juniors that may not have time for evolving relationships, right? So just any suggestions or I'll kind of do a quick fire for everyone, or if anyone wants to jump in here on that one.
I'll go back to my other comment before. We don't teach people how to service, and I think it's not that hard to do. And I would think about in a very quick way being able to do that. I think in a 1 or 2 hour conference or a 1 or 2 hour presentation, you can cover the highlights of you want to be treated like people treat you, and setting reasonable expectations and returning phone calls. And just letting your people understand that the people you're doing work for don't really always know what you're doing, but they always know how you treat them. So let's be conscious of that.
Good. And Ben, anything?
Yeah, I think that training and pairing them up with senior people who are really good at it so they can learn, and then building that element, client relationship management, in as part of your organization's DNA, so that the junior people know in order to progress within the business, they have to get involved, they have to contribute, they have to take themselves out of their comfort zone. Because if you do that, you'll find very quickly that people will want to be like their peers and will want to be doing it, because most people are ambitious and want to get promoted and want to earn more money as well.
Okay, great. Well, Kevin, I'll let you go. I'll let you wrap up here in just a few minutes.
If you're a significant player in any professional service firm sector, you should have a next gen program, next generation. You should ensure that your junior people from day one, when they step across the threshold as a trainee, understand the importance of networking, building their own network, understanding what client service is all about, understanding what business development is all about, and actually getting them to build relationships with their peers, not only in clients, but also in referral organizations, and, get them to do what the partners do with those peer groups, organizing seminars, organizing events, socials, those sorts of things. So they build those relationships. And as those two groups move up within their organizations and they get promoted, they'll start transacting with each other rather than through the partners that they currently report to. So your next gens are very important. You should have a proper program to ensure that they develop the skills and the networks that are going to stand them in good stead in the future.
Great. Well, thank you, gentlemen. This has been a great discussion today. I think just wanted to hit on some key points that we heard throughout. So, as take into consideration as you look at issues and working around succession planning, this really is a top-down approach. So you need to have involvement from your leadership teams and really the efforts that you take identifying a key account management program and making sure that you do have the engagement with your clients, making sure that they're involved throughout. Great point here, Kevin, with the next generation program. I think that that's really, key to success. And, pick up on what Gary said, do less with more, right? Use technology to help you with, with the plans and getting these things in place. So again, Kevin, Ben, Gary, this has been a great conversation. I've learned a lot about some other industries that I didn't know, but as I said at the onset, a lot of similarities that we're seeing across. So thank you to the three of you, and thank you to everyone for taking time out of their day to attend the session. As Lauren shared, this recording will be sent out, and for those that have sent in some additional questions, we will be sure to follow up with you individually on those questions that have come through. So thank you all today. Everyone have a great rest of your day.
Thank you.